Okay, so you know how it is these days, right? Like, there are just so many ways to get around now that don't involve owning a car.
Yeah,
It's
it,
kind of crazy.
yeah,
It seems like every day there's a new scooter company or ride-hailing app or like car sharing thing popping up. It's definitely a big shift in how we think about transportation, right?
absolutely.
And that's exactly what we're diving into today. We're gonna like peel back the layers and understand the real driving forces behind all of this and, well, yeah, just figure out what the future of transportation might actually look like. For you, our listeners who really want to get a handle on this quickly, we're going deep.
Yeah, and we've got a really solid report to work with here. It's a 2025 market research report, and it's basically a complete overview of the global shared mobility landscape. So it
Nice.
looks at everything from those ride-hailing apps we were just talking about to car sharing, bike sharing, scooter sharing, you name it. It covers the whole world, really.
So basically, our mission today is to kind of dissect this report, pull out the most important insights, like the key numbers to pay attention to, the projected growth, and the underlying trends that are really driving this market.
Yeah.
We want to give you, the listener, a clear, structured, engaging overview of where shared mobility stands, like right now in 2025, and where it's headed. No information overload here, just the really essential takeaways.
I like it.
Okay, so first things first, let's talk about the size of this market. It's already pretty massive,
Yeah.
right?
It really is. As of 2025, this report estimates that the global shared mobility market is, get this, a whopping 312.84 billion US dollars.
Wow,
Big number.
that's a big number. But I guess what's even more interesting is how much it's expected to grow in the coming years, right?
Exactly. And the growth projections are pretty amazing. The report forecasts that by 2033, the market will reach over 1.05 trillion US dollars.
Okay, so just to like put that into perspective, we're talking about going from like hundreds of billions to like over a trillion.
Yeah,
That's a huge leap.
it is.
Okay, so what's fueling this kind of dramatic growth? Like, what are the major factors that are really pushing this market forward?
So the report pinpoints a few key drivers.
Hmm.
First and foremost, you have the growing urban population.
Right, yeah. Like more and more people moving to cities.
Exactly. More people living in cities means more demand for transportation.
Hmm.
And of course, the natural consequence of all those people in cities is
More traffic.
more traffic. Exactly. So you've got more people needing to get around, and you've got more congestion on the roads.
Making it harder to get around.
Exactly. So shared mobility offers a way to, a more efficient way to navigate those urban challenges. It's often just easier and faster to grab a scooter or hop in a ride-hailing car than to try and find parking in a crowded city center.
Yeah, absolutely. Especially if you're in a hurry, like just getting from point A to point B, it can be a lifesaver sometimes. Okay, so we've established that there's a lot of growth happening, but is it happening evenly across the world?
No, actually, it's not. There are some clear regional variations.
Okay, so let's break those down then. Who's leading the pack right now?
Right now, North America is taking the top spot.
Okay.
As of 2025, North America accounted for over 40% of the global shared mobility revenue.
Wow.
And that translates to a market size of about 62.57 billion US dollars.
Okay.
And it's still projected to grow at a pretty healthy rate.
Mhm.
The report forecasts the CAGR of 15.3% through 2033.
Okay, so North America is definitely the front runner for now. What about Europe? Where do they stand?
Europe is currently in second place globally. In 2025, it held over 30% of the global market share, with a market size of around 57.88 billion US dollars.
Okay, so still pretty significant.
Definitely. And their projected growth is also pretty impressive, with a KGR of 15.2% from 2025 to 2033. So, the more developed economies are still major players in this market.
Right. So we've got North America and Europe kind of leading the way for now. But what about the rest of the world? What's happening in, Asia, South America, Africa, those kinds of places?
So this is where things get really interesting. These are the regions where we see the most rapid growth happening.
Okay.
Let's start with the Asia-Pacific region, or APAC.
Okay.
In 2025, APAC held about 23% of the global market, with a size of 164.24 billion US dollars.
Okay, so a pretty sizable chunk already.
Yeah. But here's the picker. Their projected CAGR from 2025 to 2033 is 17.1%, making them the fastest growing region in the world.
Wow. Okay, so APAC is really taken off.
Yeah, exactly. And that kind of growth, really points to the rapid development and um, urbanization that we're seeing in a lot of Asian countries.
Makes sense. So what about South America, the Middle East, and Africa?
They're all showing strong growth potential as well. South America had over 5% of the market in 2025 at about 10.95 billion US dollars, with a CAGR of 16.9%.
Okay.
The Middle East had about 2% market share in 2025 at 11.26 billion US dollars, with a CAGR of 17.2%.
Got it.
And Africa, while starting from a smaller base around 1% in 2025, is still projected to grow at a pretty healthy 16.6% CAGR.
Okay, so basically what we're seeing is that while North America and Europe have the biggest slices of the pie right now, the rest of the world is catching up, and they're catching up fast.
Yeah.
Okay, so we've talked about the regional variations, but let's get back to the big picture for a second. What are the fundamental forces that are really propelling this global shift towards shared mobility?
Well, we've already touched on a couple of them, like urbanization and traffic congestion, but there are a few other key drivers that are really important to understand.
Okay, so let's unpack those. What else is contributing to this global phenomenon?
One of the biggest factors is the advancements in mobile technology and digital platforms.
Right. Yeah.
I mean, think about it. It's never been easier to, like, hail a ride, rent a bike, find a scooter, whatever you need. It's all right there in your pocket on your smartphone.
Yeah, you just open an app, tap a few buttons, and boom, you've got transportation. It's pretty amazing when you think about it.
Exactly. And that ease of access, that convenience has really changed how people think about getting around.
For sure. Okay, so technology is a big one. What else is playing a role?
Um, Another major factor is the growing concern about the environment.
Right, like climate change and all that.
Exactly. More and more people are becoming aware of, the impact of their transportation choices on the planet.
Right.
And governments around the world are starting to implement policies that encourage shared mobility as a more sustainable alternative to everyone driving their own car.
Yeah, that makes sense. So we've got the convenience of technology, the awareness of environmental issues, and, well, let's be honest, owning a car can be really expensive, right?
Oh, absolutely. The high cost of vehicle ownership, including insurance, maintenance, and, the constantly fluctuating gas prices, is definitely pushing people to explore more, flexible and often more affordable options.
Yeah, totally. Like, especially if you live in a city and you don't really need a car for your daily commute, shared mobility can be a much more economical choice.
Exactly.
Okay, so it seems like shared mobility has a lot going for it, but are there any downsides?
Well, of course, no market is without its challenges.
Right.
And this report does highlight a couple of key restraints that are worth considering.
Okay, let's hear them. What are the potential roadblocks for this market?
So one of the biggest challenges is the high operational and maintenance costs that shared mobility providers have to deal with.
Makes sense. Like, keeping a large fleet of vehicles running smoothly can't be cheap.
No, it's not, especially when you factor in things like charging infrastructure for electric vehicles,
Hmm.
which are becoming more and more common in shared fleets. It's a significant expense.
Right. Okay, so high operational costs. What's the other main hurdle?
The other big challenge is the inconsistent regulatory landscape.
Ah, yeah, I can see how that would be a problem.
Yeah, so basically you have different regions and even different cities within the same country with different rules and regulations regarding shared mobility.
Yeah.
And that can make it really difficult for companies to, expand and operate across multiple markets.
Right, like trying to navigate all those different laws and permitting processes.
Exactly. It's a lot to keep track of.
Yeah. Okay, so it sounds like there are some significant challenges to overcome, but despite those challenges, the market is still projected to grow at an incredible rate.
It is.
So let's look ahead for a second. What are some of the emerging trends that we should be paying attention to in the shared mobility world?
Well, there are a couple really exciting trends that I think are going to have a big impact on the market in the coming years.
Okay, let's hear them. What are like the big things to watch out for?
The first one is the increasing integration of electric vehicles, EVs, into shared fleets.
Right. Like we're seeing more and more electric cars on the road in general, so it makes sense that they'd start showing up in ride-hailing fleets and stuff like that.
Exactly. And it's not just about cars either. You're also seeing more electric scooters, e-bikes, all sorts of electric micromobility options.
Right.
And there are a couple of reasons why this is happening. One is, obviously, the environmental benefits,
Right?
but it's also about cost. EVs are generally cheaper to operate than gas-powered vehicles in the long run because, well, electricity is cheaper than gas.
Yeah, and you don't have all those, oil changes and engine maintenance and stuff to worry about with an electric vehicle.
Exactly. So the shift to electric is definitely gaining momentum, and I think we're only going to see more of it in the future.
Okay, so EVs are a big one. What's the other trend that you mentioned?
The other big trend is the growing use of AI and the Internet of Things.
Okay, AI and IoT. Can you give me an example of like how those technologies are being used in the shared mobility world?
Sure. Um, think about real-time tracking of vehicles.
Okay, yeah.
That's all powered by IoT.
Right.
Or dynamic pricing that adjusts to demand.
Okay.
That's AI.
Got it.
Or even predictive maintenance that can anticipate when a vehicle needs servicing.
Okay.
Again, that's AI. So these technologies are being used to enhance the user experience, optimize routes for drivers, and just make everything run more efficiently.
Got it. Okay, so AI and IoT are kind of working behind the scenes to make shared mobility smarter and smoother.
Yeah, exactly.
Okay, cool. Now, let's talk about the different segments of the shared mobility market. The report breaks it down into a few different categories.
It does, yeah.
Okay, so let's go through those and kind of see how each segment is performing. First up, we have the distinction between the organized and unorganized sectors. What's the difference there?
Okay, so the unorganized sector refers to the more informal shared mobility services.
Yeah.
Think about things like local taxi operators who might not be part of a larger network,
Okay.
or informal ride-sharing arrangements that people set up themselves.
Okay, got it.
And this sector is particularly dominant in developing regions.
Okay. Why is that?
Well, there are a few reasons. First of all, there's often less regulation in these regions, which makes it easier for smaller independent operators to get started.
Makes sense.
And there's also a higher prevalence of cash-based transactions in these areas, which can make it easier for people to access these services without needing a credit card or a bank account.
Right. Yeah, that makes sense. Okay, so the unorganized sector is kind of the more informal, less structured part of the market.
Right.
What about the organized sector?
So the organized sector is, well, it's more structured. It's characterized by companies that operate within regulatory frameworks, and they often use more advanced digital platforms for things like booking and payment.
Okay, so like your Ubers and Lyfts of the world would fall into this category.
Exactly.
Yeah.
And while the unorganized sector is still larger overall, the organized sector is actually the fastest growing segment of the market.
Interesting. So what's driving that growth? Like, why are people choosing these more structured services?
Well, I think there are a few reasons. First of all, these companies often offer a more consistent and reliable service. They have standardized pricing models, they've implemented safety features, and they have user-friendly apps that make it easy to book and track your ride.
Right.
And I think there's also a growing preference for these more regulated services just from a safety and accountability standpoint.
Yeah, that makes sense. Okay, so organized versus unorganized. Got it. What's the next segment breakdown?
Okay, the next one is shared mobility types. And the report breaks this down into ride sourcing and ride sharing.
Okay.
So ride sourcing is essentially what we think of as on-demand ride hailing.
Okay.
You request a private ride through an app, and a driver comes and picks you up.
Right. Yeah, your classic Uber or Lyft situation.
Exactly. And this is currently the largest segment within the shared mobility market.
Okay, and why is that?
Well, I think it's mainly due to the convenience factor.
Makes sense.
Ride sourcing is incredibly accessible. You can, book a ride from pretty much anywhere at any time, and it's relatively affordable for a lot of people.
Right. Okay, so ride sourcing is the big player in the shared mobility world right now. What about ride sharing?
So ride sharing is where you share a ride with other passengers who are going in a similar direction.
Okay.
And this segment is growing rapidly.
Okay. Why is that?
Well, it's often even more affordable than ride sourcing because you're splitting the cost of the ride with other people. And it can also be a more environmentally friendly option because you're reducing the number of cars on the road.
Yeah, that makes sense. Okay, so ride sourcing and ride sharing are both doing pretty well in the shared mobility market.
Yeah, they are.
Okay, what's the next segment we need to talk about?
Okay, next up we have business models. And the report breaks this down into B2C and P2P.
Okay, B2C and P2P. Let's start with B2C. What does that stand for, and how does it apply to shared mobility?
B2C stands for business to consumer.
Okay.
And this is the most common business model in shared mobility.
Okay.
It basically means that a company provides the shared mobility service directly to individual consumers.
Okay, so like Uber would be a B2C company.
Exactly. Uber, Lyft, all the ride-hailing companies we've been talking about, those
Yeah.
are all B2C.
Right.
And this model is so dominant because it's just really straightforward and easy to use. You
Yeah.
open an app, you request a ride, you pay for it, and that's it.
Yeah, it's pretty simple. Okay, so B2C is the big one. What about P2P?
P2P stands for passenger to passenger.
Okay.
And this is a model where individuals provide shared mobility services directly to other individuals.
Okay, so like a ride-sharing app where you connect with someone who's going in the same direction and you split the cost of the gas.
Exactly.
Whoa.
Or a platform like Turo, where you can rent a car directly from another person.
Right.
And this segment is growing rapidly because it can be really cost-effective for both the passenger and the person providing the service.
Yeah, that makes sense. Okay, so B2C and P2P, those are the two main business models in shared mobility. Got it. What's next?
Okay, next we have vehicle types.
Okay.
And I think it's no surprise that passenger cars are still the dominant vehicle type in the shared mobility market.
Yeah, I mean, they're the most common type of vehicle on the road, so that makes sense.
Right. And they're used for everything from ride-hailing to car sharing to traditional rental services.
Okay. But the report also mentioned micromobility as a rapidly growing sector, right?
Yes, it did.
So what's driving that growth?
Well, I think it's mainly driven by concerns about urban congestion and the environment.
Makes sense.
You know, if you're just trying to get across town quickly or if you need to cover that last mile of your commute, a scooter or a bike can be a much more efficient and eco-friendly option than a car.
Right. And you don't have to worry about finding parking.
Exactly.
Yeah.
And we're seeing more and more cities investing in infrastructure to support micromobility, like bike lanes and dedicated parking areas.
Yeah, I've definitely noticed more of those in my city. Okay, so passenger cars are still the big dogs, but micromobility is nipping at their heel.
I like that analogy.
All right, last but not least, let's talk about propulsion. Like, what are the different ways that these shared vehicles are powered?
Okay, so the most common propulsion type right now is still internal combustion engine,
Yeah.
or ICE vehicles.
Okay, so your traditional gas-powered cars.
Right. And that's mainly because, well, ICE vehicles are still more widely available than electric vehicles.
Right.
And the refueling infrastructure for gas-powered cars is much more developed than the charging infrastructure for EVs.
Yeah, there's still a lot more gas stations than charging stations out there.
Exactly. But even though ICE vehicles are still the majority, the report highlights battery electric vehicles, or BEVs, as the fastest growing segment in terms of propulsion.
Okay, so electric power is definitely on the rise.
Yeah, it is. And there are a couple of key factors driving that trend. One is government incentives.
Okay.
A lot of countries are offering tax breaks or subsidies to encourage people to buy electric vehicles.
Right.
And another factor is just the increasing availability of charging infrastructure.
Makes sense. Like, and the more charging stations there are, the more practical it becomes to own and operate an electric vehicle.
Exactly. So I think we're going to see a pretty rapid shift towards electric power in the shared mobility market in the coming years.
Okay, so lots of exciting developments happening on the propulsion front. Now, we've covered a lot of ground here, but I think it would be helpful to zoom in on some specific regions and countries. The report provides some really granular data. Right?
Oh, it goes.
Okay, so let's start with Africa. What are the key factors driving the shared mobility market there?
So in Africa, the market is primarily driven by rapid urbanization.
Okay.
A lot of people are moving to cities, and they need ways to get around.
Right.
And there's also a significant increase in smartphone penetration in these regions, which makes it easier for people to access and use shared mobility apps and services.
Right, so the technology is there to support it.
Yeah. And then, of course, there's the issue of affordability.
Right.
Shared mobility can be a much more affordable option than owning a car, especially in areas where public transportation is limited.
Yeah, makes sense. Okay, so urbanization, technology, and affordability are the big drivers in Africa. What about the Middle East?
So the Middle East is seeing a similar set of drivers. You have uh, rapid urbanization, high rates of smartphone usage, and a lot of government initiatives aimed at promoting smart transportation solutions.
Okay.
And the high cost of fuel in some areas is also pushing people towards shared mobility.
Right. Okay. So similar story there, just maybe some different nuances depending on the specific country.
Yeah.
Okay. What about South America?
South America's market is largely driven by urbanization, traffic congestion, and similar to Africa, the high cost of fuel.
Right. So again, we're seeing some common themes here.
Yeah, definitely.
Okay. Now let's move on to Asia Pacific. We talked earlier about how this region is expected to see the fastest growth in the shared mobility market.
Yeah, it's a really dynamic region.
So what's driving that growth?
Well, it's a combination of factors that we've already discussed, like urbanization, technology, and government support for sustainable transportation.
Okay.
But I think the sheer population density in many Asian cities is also a major factor.
Right. Like there are just so many people who need to get around.
Exactly. And shared mobility offers a much more efficient way to move those large populations than individual car ownership.
Makes sense. Okay. Now let's jump back to Europe for a second.
Okay.
We talked earlier about how Europe is the second largest market for shared mobility, but what are some of the specific factors that are driving growth at the country level?
Well, we're seeing a strong emphasis on sustainability in a lot of European countries,
Okay.
and that's translating into government policies that support shared mobility and disincentivize individual car ownership.
Right.
And then you also have the rising cost of fuel and the implementation of congestion charges in many major cities,
Mhm.
which are both pushing people towards more sustainable and affordable transportation options.
Yeah, I've heard about those congestion charges. Like if you drive into the city center during peak hours, you have to pay a fee.
Right, yeah. It's a way to discourage people from driving
Mm.
and encourage them to use public transportation or shared mobility services.
Okay, so sustainability is a big driver in Europe. What about North America? What's happening there at the country level?
So in North America, the market is being driven by a combination of factors,
Hmm.
including urbanization, the high cost of car ownership, and a growing awareness of environmental issues.
Okay.
And we're also seeing a shift in consumer preferences, especially among younger generations.
Okay, how so?
Well, there's a growing trend towards valuing access over ownership.
Okay.
So rather than owning a car, people are more interested in having access to transportation when they need it.
Right. Yeah, like a subscription model for transportation.
Exactly. And shared mobility fits perfectly into that model.
Okay, so lots of interesting trends happening across the globe.
Yeah.
Now, we've covered a lot of information here, so I think it's time to kind of like step back and synthesize everything. What are the key takeaways from this deep dive into the shared mobility market?
Okay, so the big picture takeaway is that the global shared mobility market is poised for significant growth over the next decade.
Okay.
And that growth is being driven by a combination of global megatrends like urbanization and technological advancements, as well as a growing awareness of the environmental impact of transportation.
Right.
And we're seeing this growth happening across all segments of the market, from ride-hailing to car sharing to micromobility.
And it's happening all over the world, too.
Yeah, exactly. It's a truly global phenomenon.
Okay, so shared mobility is here to stay, and it's only going to get bigger.
Yeah, I think that's a safe bet.
Okay, so for you, the listener, I hope this deep dive has given you a solid understanding of this rapidly evolving landscape. You know, we've covered the key drivers, the challenges, the trends, and the regional variations.
And the key takeaways.
And the key takeaways. So you should be well equipped to, to understand what's happening in the world of shared mobility and what it might mean for the future of transportation. Now, before we wrap up, I want to leave you with a thought to ponder.
Okay, I like it.
We've talked a lot about the growth of shared mobility, but what are the potential long-term implications of this trend?
That's a good question.
Like, how will it impact urban planning and infrastructure development?
Yeah.
Will it change how we think about car ownership?
Yeah.
And what new opportunities or challenges might arise as this market continues to evolve?
Lots to think about.
Definitely food for thought.
Yeah.
All right, well, that's all the time we have for today's deep dive. Thanks for listening.
Thanks, everyone.